Good afternoon. How are you all doing? Afternoon, everybody. Was Shish? Can't say your name. Crumb, Fletch, Monkey, Mark, Callum, Mumo, Neo, David. How are we doing? All good. Happy Tuesday. XR update.news 8:15 Chicago. Good morning. It is. So it is Tuesday. Today we've had the CPI flash estimate for the Eurozone, which has come out at 2.9. So, but go away, virtually as forecast. So nothing particularly exciting to report on that. Year-on-year flash estimate 2.5 as expected, 2.9. So it's kind of up, but not up. So ever so slight increase. Lagarde has come out, and other ECB members came out this morning. Lane specifically. No, it wasn't Lane. It was someone else. Soft landing not guaranteed for the Eurozone. I would need convincing to cut. It was Wunsch. I would need convincing to cut rates more than twice this year. Case for the July interest rate cut has gone. So they're basically sticking to what they said before. They're not cutting rates July. And the next rate cut is expected to be August. Then we will miss September. Then we will do October. Then we will miss November. And they will decide in December whether or not they do a third. So it's 2 to 3 rate cuts this year. And they're going to need inflation to drop before they'll do a third. So that's basically the euro today. Not a lot of impact on that euro, really. We've had some downward movement when that was all mentioned this morning, but not really gone anywhere particularly. We've had Euro New Zealand hit ADR. That was an upside hit, though. So as you can see, a little bit of downward movement on the euro, but obviously we opened there, we shot down, we've pushed up. We're not far away from where we opened. So nothing particularly dramatic from that news overnight. Other than that, there was no other news really overnight. Not a peep out of Japan. So not, if you scroll through and have a look, there's some RBA meeting minutes there. Market has been driven by various factors, including sentiment speculation, but there's nothing else basically from the BOJ really at all. So no more talk of intervention at the moment. There's another one there. I missed that one. Rising interest rates could put pressure on government's finances. Yeah, so there's nothing there particularly exciting. Other than that, today there's your CPI news from this morning. Other than that, there's a load of blue crap, and that's pretty much it. So the rest of the day, we've got Lagarde and Powell speaking at the market open. So basically in 9 minutes. So Lagarde has already said that we are not having any rate increases in July. So that's fine. So there's nothing much she should say here that should really impact the market at the New York Open. Powell, however, obviously could make some comments which will drive the US dollar. So we need to pay attention to that. The fact that it's happening at the open as well, we might get a little bit of a weak open while the market just waits to digest anything he says. But we'll see. So if the open is quick and we get clean breaks, I might take short, sharp profits today. But if it's, fairly lackluster, we'll have to wait and see what happens. We've also got Jolts at 3 o'clock. Jolts doesn't really do anything much most of the time. If it's a big deviation, then we might get some movement. But other than that, we don't get a lot out of it. So that's it. It's unemployment claims tomorrow for the US. So that's the news all covered. Your ADRs today, we've got Euro New Zealand. That was an ADR hit to the upside. So we had a slight gap down and then we pushed up just above ADR. So if you measure ADR and that high there, and then you measure where we opened and the gap down to that wick, it's not really an ADR. It's just about pushed up to an ADR, but not really hit it. But either way, if you did take that ADR today, you've had a lovely result. So there's a 5-minute reversal alert. Not you can see it because it's too zoomed in. But there was your 5-minute reversal alert this morning up at ADR. So nice break, straight down, retest, drop. So you'd be out on that already. Pound New Zealand, pretty much the same move. I've got a sell on that at the moment, which was taken off of the ADR hit to the upside. Sorry, RSI hit to the upside. So that was an RSI extension. Just doesn't look like that's extended to me. EA took one though. But yeah, so that was extended to the upside. So I'm in a short there, looking for a push back down. I need to put a target on that. Go for 125 ADR. Obviously, we got the elections on Thursday, so this could be a big drop on the pound coming up. Pound US dollar. So that was an ADR hit to the downside. That's what you're already out of that one. So that hit straight down to the to ADR, straight off of ADR. We've done ADR to the upside as well. So that's a really good one. Look. So opened up, ADR hit. That's not an ADR hit to the downside. I'm lying. Ignore me. 35, yeah. So it's an ADR hit to the upside. So short opportunity on pound US dollar. Wait for the reverse alert to go in. And then you've got a short opportunity there. Nice target to the downside on that double bottom. And also, so this area here is a good support, but obviously we're looking for bearish movement on the pound when we get that announcement that the interest rates are coming down, whenever that happens. And we got New Zealand dollar CAD. So that was an ADR hit to the downside. As you can see, it's bounced straight off. I've got longs on this already. About 175 ADR is my average on this. It's just been grinding for the last week or so. So yeah, we've just basically taken out the lows there. There's a low there, low there. We've wicked down through it and we're going straight back up again. So good ADR reversal there. M5 reversal alert is there. Not very pretty, but it is. So good looking long. So those are your ADRs today. Not much. Nothing's hit its weekly range yet today. I've broken my dashboard. And nothing's hit the monthly because it's obviously too early in the month at the moment. So those are your ADRs. There's a few RSIs on the 4 hours, nothing on the hourly. So there's no RSIs to look at on the hourly, nothing at all today. All the yens are still extended. Every single yen pair, actually not every single yen pair, Euro yen, pound yen, and US yen extended to the upside. I'm still in it, still holding it. I've had a lovely reversal alert just going this morning, or actually in the last hour. So we'll see. But pound yen, again, extended. This yen is just still dead. We have got some signs of weakness came in yesterday. We've hit the double top today. So if we get a reverse alert on that today, that is your M pattern. So that would be a lovely reversal. Target back down in propulsion where that kind of intervention-y type move happened. So US yen, pound yen, euro yen. That's just about to give you a reverse alert. Support rectangle holding up at the moment. We've also got pound Swiss just about extended on the 4 hour. It's just got extended again. So that was an extension last week. And it's rallying again. I don't know where all this isn't pound strength, is it? This is Swiss franc weakness. I know, it is a bit of pound strength as well. So we got some weakness in the Swissy. And we got some strength in the pound as well. So that's pound Swiss is a bit extra extended. Probably going to get an ADR hit on that in a minute. Euro Swiss obviously extended to the upside as well. So that's extended and embedded. Has been so we got extended 3 weeks ago. Hasn't really come out of it, has it? It's just been rallying for the last couple of weeks, that one. On that week, Swiss franc off of the interest rate change, or the second interest rate change, which was there. I'll circle it. So yeah, weak Swiss franc, but we will be getting a weak euro at some point as well. So this is a pullback on this leg. So that's a 50% retracement. So it's getting ready for a good looking potential short. It might push up into that propulsion as well. And you've got CAD Swiss also extended on the 4 hour. So that's a good 50% retracement. It's just coming up into that monthly low there, which was a double bottom, which then broke without propulsion. So we're sitting in propulsion. Good looking short opportunity there. And we got Aussie New Zealand, which is just not stopping again. Weird. Just bizarre, this Aussie New Zealand, the way this is moving at the moment. It's just crazy. But shorts up at the double top, basically. But look at it. It's just stuck. Got divergence, bearish divergence on it. Triple bearish divergence as well. Look. Yes, you got lower high 3 times with a higher high 3 times in price. That's triple divergence short. Very strong short signal. So they're going to run out of buyers at the moment very shortly, probably in this propulsion gap if we can get up there. So good looking short opportunity, Aussie New Zealand, if you're not already in it, but you're probably in it from somewhere around there if you're in. So there's your RSIs and your ADRs. Nothing much else to look at on those at the moment today. Banked 1.4% today. Banked just 0.25% yesterday as well. So I've got US dollar CAD also in profit. I might take that in a minute. Leave it running for the moment. See what happens with that one. Right, so that's all the extensions and everything. I'm not going to run through all the pairs today because I did that yesterday, and I'll do it again tomorrow. Let's just watch the open. Big rally coming in on the Dow pre-market. Got 5 seconds to the open, and we've also got the talking heads starting to talk as well. Afternoon, Church, Virginia, Abdi, Ismet. David, up 3% already on RSI2 this week. Good job. Banked 9% last week. Excellent. Very good. So no trades triggered so far. Pre-market ranges on all of them are within 20%. So all 3 will take a break on if it breaks. Looks like I'm going long on the NASDAQ. Nope, not quite. Thinking about it. Nope. Can't get it triggered. There we go. Long NASDAQ. Not a massive amount of volume coming in at the open today. A little quiet. Morning, Matt. Tried RSI2 on a small account. Swiss players don't play nice. Well, the Swiss players will play nice if they're not squeezing, which they are, because interest rates have dropped unexpectedly twice. Nothing wrong with the Swiss franc. It's the fact that they didn't tell us they were dropping interest rates. So it's just going to go to parabolic, isn't it? Long on the S&P. But yeah, the Swiss franc is unpredictable. That's, if you do back testing on any strategy on the Swiss franc, it will never perform as well as everything else. Swiss franc and yen on all strategies, regardless, do not perform very well because they are completely erratic and unpredictable currencies. So you will generate profit out of them, but it's more difficult to get profit out of them because they're less rhythmic, basically, less normal with their movement, because obviously they will do all sorts of things when we get safe haven runs. So a nice clean break on the NASDAQ today. 1.5 hour. I'm just going to take 1.5 hour and see how far we run on that. Got 1.5 hour on this S&P as well. What's my thoughts on RSI divergence? It's a good confluence. but I wouldn't use it as anything but confluence, as I've just shown you on that chart. Look, whichever chart it was I just showed you. Can't remember which one it was I was talking about divergence on. It was a 4 hour, wasn't it? It was in New Zealand. So yeah, I mean, divergence is good, but it's not a great signal. A lot of people sell courses on divergence. Yeah. It's a good confluence to have. So if you've made a new higher high and RSI or stochastic or MACD or CCI or whatever you're using as an oscillator for condition has made a lower high, it means that price has pushed up on lower volume typically, or lower strength or whatever. But that doesn't mean it's coming down. It means it's abnormal. And that's what we're looking for. We're looking for abnormal stuff. So if you get a news event that drives something, you are going to get divergence, because you're going to get slippage, and you're going to get basically fast movement through price because there's no orders there, because there wasn't an expected move coming, and that creates divergence. But it's a nice to have. But I've tried trading in the past. I've tried trading many divergence strategies. I did a divergence course from a Russian guy once. And his whole strategy revolved around divergence, which was great. It didn't work, but it's like everything. It works sometimes. Yeah, great. You know, that's not divergence there. That high there and that there, some people would call that divergence. Some people want that to be angled up. Some people will, and the problem with divergence is it's 100% discretionary. Where do you draw divergence from? There's a lovely divergence there. Yeah. But are you using, how many bars are you using to measure divergence? There's 1,000 ways to do it. It's completely discretionary. And after the fact, you can see it really easily. But from there to there right now is pretty much level, and it's not there. So that is bearish divergence. Whether it will come down or not is still 50-50. So it's just a confluence. Something to add into a system to give you an extra tick, basically. But it's like everything, isn't it? You know, I can show you 1,000 times where divergence worked. Look at that. Beautiful bullish divergence. Bang. Great move. And then I can show you 1,000 times where it didn't work, and you'd be going, "Ugh, that's crap." Just a condition. It's got nothing to do with price movement. Stocks. If you use volume divergence, and again, everything you do in Forex, and this is why nothing works very well in Forex, because everything to do with trading, indicators, statistics, analysis, it's all come from the stock market. And the stock market uses volume, and volume tells you a load of information about what is going on. Divergence was a volume based system where you had low volume coming in on higher price movement, meaning exhaustion. After exhaustion comes that, because you can't buy anymore because there's no one left to sell to you. Therefore, the market exhausts and retraces. So when the volume starts to die down and price continues to push, it means that the market is reaching for higher prices just to get its orders filled, and eventually it will just give up. Volume divergence. Volume weighted average price. Yeah, everything to do with volume works really well, and that's where divergence came from. But it's nothing to do with, and this is where the terminology overbought and oversold comes from. You cannot have an overbought or oversold condition on a Forex pair. It's not a tangible object. Yeah, it cannot be overbought because it hasn't got a value. A stock, a company, has a value. So when the stock price runs up too high and an oscillator goes above a specific area, they have bought too much stock above the value of the company. Therefore, the price will drop, come back in line with the company value. If it's oversold, they've sold too much stock and it's now undervalued. So they will need to push the price back up again. With Forex, this thing could go parabolic up for 6 years solid, and it means nothing because this price is just a difference between a currency and a currency. There is no value anywhere. Overbought and oversold is a term that people use in stock trading, and all the gurus come out and go, "Oh, I've got a system about in oscillators, and I'm going to teach you how to identify overbought and oversold conditions." Fundamentally wrong from the start because there's no such thing as overbought. It doesn't exist. Gold can be overbought because it's a tangible object. So when there is a supply and demand issue with gold price goes up. The price of gold gets too high. They've bought too much of it in price-wise, and then it will come back down again when the supply opens up again. As soon as Russia and Ukraine stops and we suddenly go, okay, there's no export ban on Russian gold anymore, gold price is going to drop because there'll be a flood of Russian gold coming into the market. Therefore, there's more supply, which means that prices will drop. Supply and demand, overbought, oversold. Just doesn't work in Forex. People use the same terminology, but it's not really what you should be doing. Blimey, it's a big push. I think Bailey might have just said something. Powell, rather. The disinflation trend shows signs of resuming. It's closing out the S&P at the highs. So we're just approaching the high of the day, basically, on the S&P, which is why I've got out of it. It's 3R, so it's a decent move. I'm going to close out the NASDAQ as well. Just approaching yesterday's high on the NAS, so we're likely to get a push back. We'll let the Dow run. Good breaks today, so 3 clean breaks today. Easy money today. Very nice. I don't know if it's you or your expensive mic, but I'm so glad you're not like others. I don't know if it's you or your expensive mic, but I'm so glad it's not like others. When you sip your tea, you can't hear any sipping or swallowing. Yeah, I don't know. Sorry about that. I'm just polite. That's what it is, David. I run my Mumo. I run the strategy excluding yen and Swiss pairs and Aussie New Zealand. Yeah. So my back testing with RSI2, yen, forget it. Swiss, meh. On my testing, it did produce proper alpha. It produced positive results, but very wishy-washy. If you don't want a hectic ride, remove the Swiss from the strategy as well, and all mean reversion strategies, really. Aussie New Zealand was the one blip in the back testing that was very not unprofitable, didn't produce much profit. Let me just get my testing spreadsheet. My last round of testing. Shouldn't have shut out the indices. So this is the Aussie New Zealand. 338 out of 2,000 runs of the RSI2 strategy were profitable. This is running on the 4-hour time frame using RSI2. But the return on drawdown on those 300 runs is still pretty good. But what it does mean is, of all the variations I've tested of different stop losses, targets, lot multipliers, distances between trades and everything, more than 3/4 failed the test on Aussie New Zealand. So it's not good. It's not robust on Aussie New Zealand. And I'm not quite sure why. When you look at an Aussie New Zealand chart on the daily, it looks like it should be a mean reversion godsend, doesn't it? I mean, it's just up and down. It's beautiful. Yeah. But the problem is it trends like crazy for a long period of time. And it's not so much the fact that it trends. That's not really a problem, because in RSI tree or any mean reversion strategy during a trend, you've got pullbacks. These are mean reversions. So RSI2 gets extended and pulls back. It gets extended and pushes. So that's not a problem. It's the speed of the movement, which I think is the issue. Look at the parabolic move. Look how parabolic it is. Yeah, when it goes into a move, it moves so fast. Your RSI2, if I drop it down to RSI2, God, select it. This is using the medium, but it doesn't really matter. You get embedded RSI2, look, for, what's that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days. So you've got 16 days, pretty much a month, where RSI2 is embedded on the daily time frame during these parabolic runs. That doesn't happen on most currency pairs. You don't get moves that long. You usually get 2, maybe 3 up days before a pullback, which gives you, and obviously RSI2 is measuring 2 days worth of relative strength. So what the theory behind the strategy is, a 3 up day move will get undone, i.e. they will profit take a percentage of that initial move, which is your RSI2 exit. So Aussie New Zealand, however, doesn't do that. It goes for weeks where it just goes like that and it doesn't stop. So obviously with RSI2, you're getting in and you're just getting stopped out for weeks on end, which is why the vast majority of the tests fail. The ones that work are the ones where you scale in really close together. Yeah. So what it's relying on is making a decent profit. Look, if you look at the statistics here, the single trade exits, we're going for 2 ADR to 3 ADR as a target. So when it gets in, it's letting it run. But it's also letting it have lots of room to breathe when it gets in. It's just not very good on Aussie New Zealand. I think it's just purely because of the speed and parabolicness of the movement. You know, you can see by mine. Look here, that's obviously on the wrong RSI. But you look there. I mean, look, we got in. You're on 5 days solid straight up now. But what you would normally do is you would get in here and you'd get a pullback. That's our profit. Can't get it. So yeah, it doesn't work very well on those. But that was RSI extension on the hourly. There. And look, it just went parabolic for weeks and weeks. I had to just cut it. I knew it was coming back down again. It's just you can't stand it, can you? And this is the problem with the RSI2 strategy using a stop loss. Obviously, with a stop loss, you get stopped out. On that case, you have been stopped out however many ADR it moves. So ADR is 50. That move there was 65, 650. So you're looking at 10 ADR. So there are somewhere between 5 to 10 stop loss. It's there. No profit. Doesn't work, does it? But that's, you know, my testing shows the same thing. Aussie New Zealand, for some reason, well, not for some reason, but for those reasons, is just not good for it. They're very close trade partners, and the thing with it is when the Aussie takes control, it takes control. You've got 2 commodity pairs against each other, so they both move in tandem until one of them has a differential on interest rates, and then it just is off. Or inflation or something. There's a differential somewhere which makes one of them way more powerful than the other. So, not great, as David's identified. So basically it gives you a heads up on what could happen. Divergence, yeah. But that's true of every single indicator out there, isn't it? Think about it. This market reversal alerts indicator gives you an indication of what might happen. We might get a W pattern reversal. In that case, we did. We might get a failed W continuation of the trend. Every indicator tells you the same thing. There is a possibility of something happening, or something has just happened. With a reversal alerts indicator, it's telling you there has been a break in structure to the upside. Buyers have taken control. The retest arrow tells you that they've taken control and they've added to their positions. Strong signal. Doesn't mean that when they get to that high there, the sellers will not overpower those buyers and drive it back down. So you get a drop, accumulation, or flag break, continuation. Every indicator tells you the same thing. A condition is met or a signal has been achieved. It has absolutely nothing to do with what happens next. A line on a chart at a previous month's high means we know there's limit orders there. Virtually all the time you will get a bounce back. Whether you get a double top and it drops, or whether you get a tiny little bounce and it flags and it flies through, don't know. All that line is telling you is there is an area of interest. Divergence on a chart tells you that I'm trying to find a decent one, but here, yeah, divergence on a chart tells you that we're making new highs on lower relative strength, which means that the bulls are winning at the moment, but they're not doing it very convincingly. It will come down, but it could also continue to put in another divergence and then come off of that level, in which case everyone will be going, hey, look at the divergence there. That's amazing. They won't talk about the crap divergence that failed, the crap divergence that failed. They'll only tell you about the one that worked. Yeah, it's a 30% strike rate. It's not very good, is it? Assuming we get another divergence. I don't know. Okay, we're starting to turn around on the S&P and the NAS. So the NAS has rejected at the highs yesterday. S&P didn't quite get there, but it has rejected the high of the day, which is the open. So that's basically the open of the day. It's rejected that. And the Dow has also rejected, well, just rejecting with the rest of it. So I think I'm just going to break even on the Dow. So good day. 3 clean breaks. If we do get a rally on the Dow, that'd be lovely. Afternoon, Chucks. If you ran RSI2 on the yen with a moving average, wouldn't that be better? I would have think so, but no, it's not. I've tried it. This is the thing with the if you back test it over the last year, yes, it's brilliant. Of course it is. But if you back test it over the last 4 years, it's not bad. If you back test it over the 4 years before COVID, terrible. Yeah. So yeah, if this is COVID here, actually COVID is here. That's COVID there. Yeah. So if you'd used a 200 moving average filter on RSI2 strategy on the US dollar yen, you'd have made a killing. But go and run that back test 5 years before COVID, you'd have lost everything. Literally just lost. Constant loss. The P&L goes like this. The loss over 10 years. Over 4 years is great, which is why it's important you don't test your strategy over a month, a year, a quarter, a couple of years. You test it over a decade. You need a period of that. You need a period of low ADR, of high ADR, big volatility, low volatility, bull market, bear market, trending market, ranging market. If it's going to be robust, it's got to survive everything. Yeah. So yes, it's a great trender when it's trending. When it's not trending, it's absolute death. So what's it going to do for the rest of this year? Is it going to trend up or down? Or is it going to go into a range-bound state for the next 3 years? You don't know the answer to that question, you can't trade it. We don't know the answer to that question. This is the problem with trading. How's current RSI2 testing going? Still planning on a dedicated bootcamp video for the strategy? No. Won't be doing any dedicated bootcamp. There's nothing to teach, Mumo. When the RSI2 on the daily is extended, sell it or buy it. That's it. There's your lesson. When the profit is there, take it. There's nothing particularly complex about it. But yeah, I'm still in testing. I'm still going through results, and I'm still trying to figure out what is the best thing to do with it at the moment. My thoughts at the moment are using a 1 to 1.5 hour, a 1 to 1.5 ADR stop, and using a half an ADR target, and adding in around about 3/4 to 1 ADR. So the idea being is when RSI2 gets extended, we take a long. If it moves down, we take another long if it's gone down by 3/4 to 1 ADR. If it continues to go down, we stop out on that first position, and then we take another one. And if it continues to go down, we stop out in the second position, we take another one. We wait for it to go up, and we take half an ADR of profit. Because the strike rate is in the 80s, the times that happens are a lot lower than the times it literally just makes half an ADR with one position or two positions. That's where the edge is. That's why the return on drawdown ratio is so high. But to achieve that, you ideally need some fairly decent lot multiplication. So it's verging on martingale, which is why I don't like it. So you can achieve that profit with 1.5 or 1.25 lot multiplier. You can also achieve it with a 1.75 lot multiplier. But the 2 lot multiplier generates a hell of a lot more return on drawdown. But it's all between kind of 3.5 to 6 return. So it's all good. And that rings true on most currencies. Aussie New Zealand, Aussie US, yeah. So very much the same targeting system. Getting in a little bit further apart would be down here in the 5s rather than up in the 11s, which are the outliers. So yeah, that's kind of what my testing is showing. But I need to do more testing, and I want to do longer testing as well. So I want to use the set file and run it on every single pair and see what the portfolio outcome was and make sure it's all profitable by picking one at random. So I'm not curve fitting. I'm just going to go, I'll have that, and that, stick it in a set file, run it, and do it over a decade on every pair. It's going to tell me that the yens are no good. I'm not even testing the yens, to be honest. But the Swiss franc, look, US dollar Swiss, return on drawdown, 0.73. Absolutely tiny. New Zealand dollar Swiss, return on drawdown, 6.5. Huge. But pound Swiss, we're down in the 2s and 3s. Euro Swiss, we're down in the 3s and 1s. CAD Swiss, we're in the 1s and 0s. Aussie Swiss, we're in the 2s. Yeah, so all the Swiss franc pairs, apart from the New Zealand dollar Swiss, very mediocre. It's basically going to get a return on drawdown of 2, which means if you had 100k, that's 1,000k, 100k, in 10 years, you'll have returned 100k. Not really worth it. I mean, it is worth it, but the return on drawdown is overall is just not worth the drawdown. The drawdown's high. Look, on all these 14s, 10s, 11s, 15s, 16s, 20s, 15, 12. Yeah, I mean, the drawdown is very big with the Swiss franc. Aussie dollar CAD drawdown is 5%. Aussie US drawdown is 3%, 7%, 5%. Euro odd, you got 8%, 9%. Yeah, but the Swiss franc drives that drawdown up massively. It's just terrible because it's just not, it's not consistent. Stopped out on the Dow at a break even. Looks like it might be trying to use that propulsion gap to go up another leg. But so break even on that one. So yeah, good day. Clean breaks on all three. Could have had another couple of $100 out of that, but didn't take it. Very nice. I also try to limit my exposure. So when you get into 3 different positions, different pairs. Yeah. So yeah, if you limit the exposure as well, you will find with you could get so many signals with RSI too. This is using the Position Trader EA to do this test. But you'll be getting into sort of somewhere between 150 to 300 trades over a period of 4 years. So it's generating roughly 60 to 80 trades a year. If you break that down, you're getting 3 or 4 entries a month. So if you trade Aussie CAD and New Zealand CAD, you're going to get the same signal on both of those. So if you can control exposure by just removing one of the correlated pairs. So use RSI on H2 on H4. No, it's RSI 2 on the daily chart, entry on the 4-hour chart, or the hourly chart. Whatever you want to do, it doesn't matter. How you get in. Basically, it's a condition indicator, isn't it? RSI is a condition indicator. A signal indicator is when you get in. So what I'm using for my testing is RSI 2 on the daily, extended above 90 and below 10. And then whatever time frame I'm on, whether it be the 4-hour or the hour, I'm using the RSI, the moving average cross. And I'm using a 2 moving average. So basically it's a bearish engulfing. Yeah, because the 2 moving average pretty much hugs price. 2 moving average does that. So as soon as you get a bear move, which is equivalent to a reversal alert, it gets me in. So it doesn't matter if you use the hourly or the 4-hourly. Hourly, you'll get more signals closer together. 4-hourly, if it wicks down and pushes back up, on the hourly, you probably would have got a signal short. On the 4-hour, you wouldn't have got a signal short. So the 4-hour is going to get you into less positions closer together, which will give you less drawdown. But test it. There's not a lot of difference in it. Well, there can be a lot of difference in it, actually, if you get close together. If you're spacing your trades too close together, there can be a big difference. Afternoon, George. So with RSI 2, if you need to take a second entry, it's always a larger lot size, somewhere between 1.25 and twice the size. Yeah. You don't have to. Right. Just quickly check that news. So there's a drop in the dollar. Inflation may get back to 2% late next year or the following year. That's not good, is it? Yeah, so that's a good example there. Look, that you can't even see the candle, look, but that wick on that 4-hour candle is down to there. Yeah. So if there was a 2 moving average or the reversal, use your reversal alert. There's the reversal alert box, support rectangle. That hasn't triggered an entry, but on an hourly chart within that 4-hour candle, there could have been a push down, a push down, a push up, which gives you that candlestick. But on the 1-hour time frame, you would have got a signal. On the 4-hour time frame, because it pushed back up again, you didn't get a signal. That's the difference between 1-hour and 4-hour entries. You're going to get more of them. The lower the time frame you go, the more signals and the more chop you're going to get in price. The less reliable your trades will be, because the market could push down for 3 hours on the trot, yeah, and then push back up for 1 hour, the same distance. You'll have signals on 1-hour time frame, and on the 4-hour, you'll have a candlestick that looks like that. No signal. Full candle. So yeah, so with my testing, basically with lot multipliers, it's this column here. So this result here, for example, is 6.41 on Euro odd as a return on drawdown. This is the top result, which will be an outlier. But so we're starting our drawdown, i.e. we're closing our positions when prices move 2 ADR against us. We're targeting 1.5 ADR of movement as a TP on a single position. If there's more than one position, we use 0.5 ADR of movement. We're adding positions 3/4 of an ADR apart, which means that within that 2, you could get 2 entries, because if it goes to 2 ADR, the first one will have shut out before it takes the second one. So you only ever have 2 positions open at a time, and using a lot multiplier of 1.75. So the first entry, for example, was a 1. The second entry will be a 1.75, which means that to achieve a 1.5, sorry, these are percentages, not ADRs. Sorry, that was a complete lie. That's not, that's drawdown start at 2 ADR, but we're targeting 1.5 or 0.5%. Yeah, so basically it's just, you know, we know lot multiplication works. Martingale, which is that, blows accounts. It doesn't in this case. It's got 8% drawdown and returned 48k. But that is because it's using a stop loss and it's using a incredibly high strike rate strategy. The strike rate is 80+%. So by using Martingale, that first entry and that second entry, your average is there. By the time it's got there, you're out. So literally an intraday move like that, you're out. But I wouldn't personally want to use that. So I will be picking something down here. I'd be much more comfortable with that. That's too close though. But you know, this is what I mean. All of these work. Look at all the profit. Made 74 grand. That 21% drawdown, but made 74 grand. Why? Because it's getting in 1/4 of an ADR apart, and it's going for high targets. It's all personal preference what you want to use, but you know, any of these will work. Yeah, it's thousands. What the hell's all that? Thousands of results, all profitable. Saw something else fly past then. Yeah, all the way back down to 0. So we basically generated a break even with that set file. But you know, all of these set files all make money. Which of these is going to produce which result next year? No idea. This is the problem, isn't it? Which one do you use? Could be anyone. Good wicks to the downside, bad wicks to the upside as well. Look, market's absolutely stalled out here. We just had some ADRs trigger as well. US dollar CAD just hit ADR. Downside, I'm out of US dollar CAD short. 2 positions on that. Out US dollar CAD. 2.4 banked. News made the market move a little yet. My EA just got me in short on the pound New Zealand and euro New Zealand. Me too. I'm already in it. Would I be comfortable trading both or limit the exposure? Up to you. They are independent. Obviously, the euro New Zealand, if you look at the pound New Zealand there, and then look at the euro New Zealand, very, very different charts at the moment, because the euro and the pound are out of sync, because we've got a drop already on the euro New Zealand. So on the euro rather. The euro is more bearish in theory. However, Lagarde has just come out and said we're definitely not dropping rates in July. So the market's rallying into that, but it will come back down again because they are going to drop interest rates again. But the pound obviously are also going to be dropping interest rates. Beginning of August, it's going to happen. If they don't do it beginning of August, there's something fundamentally wrong somewhere. because we've hit interest rate targets. So there's absolutely zero reason why the Bank of England won't drop the rates. So this is bearish as well. So I would find it likely that that is what the move will be. It might rally a little bit, but they're both bearish against the New Zealand dollar. New Zealanders are going to increase interest rates potentially because their inflation's going up. So both bear. So I wouldn't have a problem with either of those. Being on both of those. Yeah. Although Larry Connors inspired you, are actually trading very differently. Yeah. So much so it could have a new name for it. Well, it's nothing different to what I do at the moment, is it? I trade RSI 14, I trade RSI 21, it's RSI 2. I trade RSI 14 on the 4 hour, RSI 21 on the 1 hour, and RSI 2 on the daily. It's no different to any other strategy that I trade at the moment, except it does have a stop. So it's the same thing, basically. You know, I'm trading Forex. Larry Connors only traded the S&P 500. It's a stock index strategy. And that's why it used a moving average. His strategy used a moving average, obviously, because it was trading stocks and they go up. Haven't been here for a while. Are you planning on making a video? No. Well, I might do, yeah. Go and just Google RSI 2. I'm not doing anything new. This has been around for 20 years. Larry Connors RSI 2 strategy. There's thousands of videos about it. I'm using the Position Trader EA to implement it. So I'm using RSI 2 on the daily, 90-10. He used different levels as well. It's up to you. Pick an exit target as a percentage of balance. Pick a lot multiplier. Pick a distance to scale in. Doesn't matter what you pick, they all work. Just pick one and test it. It's that simple. There's nothing complicated about it. That is literally the settings. 2 RSI daily, 90-10. Scale in. The only difference is in the drawdown control settings here. Yeah, that is set to 100%, which means when we get to 1%. Sorry, yeah, I was just talking about ADR on there, wasn't I? It's 1% Position Trader EA. So when I get to 1.5% in drawdown, it shuts the position. That's it. Yeah. So that's the only difference between my normal position trading strategies and this, is that we are shutting the whole lot. When it goes 1.5% into drawdown, gone. Or 1 or 2. Again, whatever you want. Like I just showed on this spreadsheet. Yeah, there's 1,939 out of 2,000 different settings here. They all produce profit. Which one's going to be the most profitable moving forward? I have no idea. No one does. You can't predict the future. But if you pick something in the middle, if you don't pick the outliers. So my general rule of thumb is to get rid of the top sort of 20 odd and pick something down here. Because this has got more chance of working in the future, but something with a fairly low strike rate in the past. And that will usually be something where the distances are further apart, because obviously the less positions you have, when it goes wrong, the less loss you've got at the end of the day. But it's a simple risk-reward based strategy. We're using 1.5%. We're giving the trades 1.5% risk to move with. Yeah, and just getting out quick. I'll probably do a video on it at some point. I just need to figure out myself what I'm going to do with it. That's the thing, because this has all come from testing an EA for somebody else. One of my friends has got 3 strategies he trades, and this is one of them. And he's asked me to build him an EA to test his strategy out properly, and to try and optimize it. And then he wants to sell the EA. So I've built him the EA. And it's great, but it's very much like my EA already, except it's got a slightly different exit criteria. But my results here and his results are very, very similar. So, and it's kind of proven to me that it really doesn't matter what you do. With RSI2, I'm getting crucified with Swiss pairs. Yeah, as somebody else has just said that. So don't trade Swiss. If you'd done back testing, Peter, you'd know that. Yeah, I've just gone through that. Aussie dollar Swiss, average return on drawdown is 2, so doesn't generate a lot of profit. CAD Swiss, the maximum return on drawdown was 1.47. Most of it is zeros, and 3/4 of the tests failed. Euro Swiss, half the tests failed. Maximum return on drawdown really is about 2. Pound Swiss, 3/4 of them passed, but you very quickly get down into the 2s. So pound Swiss is not too bad. New Zealand dollar Swiss was actually fairly good. Most of it passed. And the US dollar Swiss didn't even get to 1 return on drawdown, and only 97 out of 2,000 tests passed. So pretty much everything to do with the US dollar Swiss failed. Yeah. So the US dollar, so the Swiss franc is not good. And for exactly the same reasons I just explained about the Aussie New Zealand and why it's not good on the Aussie New Zealand, because it goes parabolic. Anything that goes parabolic on a regular basis like that for weeks on end is never, ever going to work in a mean reversion strategy. Yeah, this thing has moved from there to there without stopping. And that was 1-2 months straight up. There is no mean reversion. You will never make money shorting that. The Swiss franc, look at the Swissy, does the same thing. The safe haven currency. Yeah, parabolic up, we've been shorting it all the way. Parabolic down, we've been longing it all the way. Absolute crucified, won't work. Aussie New Zealand, parabolic. Yeah, anything that goes parabolic on a regular basis. Yeah, don't forget, mean reversion strategies work in ranges and they work in normal trends. But they don't work very well in normal trends, but they will work enough to keep you above water. In ranges, like US dollar Swiss at the moment, if you run RSI2 on the US dollar Swiss at the moment for the last 3 weeks, you've pretty much got 100% strike rate and a 3 or 4 hour return on it every single time, because it's just done nothing but that. But what is everything going to do next month and for the next year? Don't know. But for the last 10 years, I can tell you the Swiss franc, Aussie, New Zealand, and none of the yen pairs work, because they are and always have been, and very likely always will be, parabolic movers based on safe haven runs. And unexpected news. Yeah, this is what we keep saying, isn't it? US dollar Swiss, why does it keep going mental? Because they keep dropping these stupid interest rate changes on us without telling us. Yeah. Hey, guess what, everyone? I know we said we're going to do 1.5. We decided to do 1.25. Is that all right? Yeah, don't short it. They've dropped a massive clanger on us. Same as they did there. You know, they just do it all the time, don't they? So it's just not good for it. Trending also is not very good for, because it does spend a lot of its time in mean reversion. Just not very good to trade, is it, the Swiss? Wouldn't it be better to set a target to ADR instead of percentage balance? It's the same thing. So if you risk 1% over 1 ADR, and you target 1%, you're targeting 1 ADR. I'm running demos just to see. Yeah. Back test it. you will see. But yeah, I mean, the EA that I've built for the other guy, he's basically he's got a different exit strategy which works on end of day. So it's an end of day exit, first profitable close exit, which I haven't tested with this, but what I found with the testing that I've done on first profitable close, the position trader EA actually has a higher strike rate than the first profitable close exit with a slightly higher profit. Because what we're doing on the position trader EA is we're monitoring on each candle. So as price pushes up and we identify that we're in 1.5% profit, for example, position trader EA will close it. If it pushes up intraday and then pushes down intraday, that trade may be in a loss. So where his version of the EA, which is first profitable close at end of day, doesn't close that trade out, mine will. However, if we get to there and we close the trade out and the candlestick keeps going and does double the movement on that day, his version of the EA will make more money. Which one's the best to use? Whichever one basically has a better exit on that day. You can't tell, can you? You don't know which one's the best to use because you don't know each day where the price is going to close. So my conclusion was, because I was thinking about putting an end of day close into the position trader EA, doesn't matter though, because they both produce profit. Which one is the best one to use? I don't know. You just can't tell, can you? Euro pound ADR, that's annoying, so I got out of that. So got out of the euro pound short from yesterday. ADR. So if you are short on that still, watch that double bottom on yesterday. However, this could well, come all the way down today. I'm using H4M15 with RSI 2. Seems to be good scalping strategy. Target 0.2%. H4M15 with RSI 2. So using RSI 2 on the 4-hour time frame, are you? A gap. That's not a very good chart, is it? Because there's a gap in it. Let's try Euro New Zealand. Yeah, it's not bad, is it? Just trying to find somewhere it would be bad. Yeah, I mean, there you'd have got in, obviously, and it would have, what's ADR, 85. You'd have got a stop out and then initially, almost immediately, an entry to go short again, which you could have taken profit on of half an ADR. Again, this is why half an ADR is a great target to set, because with these RSI 2 extensions on the daily, you get out on intraday movement down before it pushes back up again. That's the kind of the premise. That got completely stuck. There's nothing you can do with that, but you'd have been stuck in that for a good few weeks. You wouldn't have been stopped out on it either. But then you would have made profit eventually. Longs would have worked as well. Yeah, yeah, pretty good. I've never tested H4 RSI 2. Again, test it all. Position Trader EA is fantastic for testing all this stuff. So test the 4-hour and get in on the 15-minute or the 5-minute and use whatever MA you want to use. Test different MAs as well. Test it. That's what it's there for. That's why the Position Trader EA's got so many settings, so you can test multiple combinations and see what works. Everything in theory should work, because RSI2 is literally just saying we've gone mad. And after we've gone mad, we usually undo some of it, don't we? It's just how much gets undone. But you've got to pick one. Pick a time frame. Any old time frame. But that'll work. Looks good. But you, again, you'll probably find on the Swissies, it probably won't work. You'd never have got a short exit there. You wouldn't have got a short exit there. You wouldn't have got a short exit there. You would have got one. I mean, you'd have got a quarter of half an ADR out of that just. You wouldn't have had one there. You know, this is the Swissies just doesn't conform to it. It just doesn't work. Just not very good with it. I almost want to forward test it just to confirm it, but you know. Yeah. Intraday, in out, quick. Right, that's all I've got for you today. There's not a lot else to discuss, really, because nice clean breaks on the indices today. That is all you got, though. So you have had a 4R and a 4R and a 2R. But clean breaks, nice easy money today, just not massive movement. We've had today's news all complete now. So nothing particularly exciting today on the euro side of things. And obviously, we've had Powell saying, again, inflation's not coming down. So likelihood is we're going to have to wait until 2025 for an interest rate drop, which keeps that US dollar neutral to bullish. And that's about it, really, for today. Tomorrow, we've got retail sales for the Aussie overnight. So we may get some movement off of that. But retail sales are slightly hit and miss because they're the responsive news event, really. So it's driven by inflation. So we kind of know most of the time what retail's doing. But tomorrow afternoon, we've got the unemployment claims for the US. So this is the first big mover this week for the US dollar. The PMIs didn't do a great deal yesterday. So there's potential movement tomorrow on the US. We've got the services PMIs at 3. And then we've got FOMC tomorrow evening. It's just the meeting minutes, not a press conference. So there is going to be a fair bit of movement tomorrow on all of those. So keep your eyes peeled. US dollar really tomorrow is where it's going to start to move. So live from tomorrow is going to be a morning. 8 o'clock. So go through all the FX pairs, have a look at what's coming up for the day. Thursday as well, I've moved to 8 o'clock because it's a bank holiday in the US. So I'm just going to do a look at the Swiss CPI numbers on Thursday morning. And obviously it's the UK elections. So it's a case of shut everything and hope that it doesn't go too mad. We won't get a result on the elections until Friday. So but we'll know roughly what's going on and what impact that has on the pound. Don't know. It's normally quite big, a couple of 100 ADR, 300 ADR movement. So you just got to be aware. Any pound positions you've got on, if you've got profit, it's just worth getting out. Yes, it could go your way, but it could also not. And I don't know whether it whips or what it'll do. So I'm not really interested in holding long term. But it will be bearish pound. Everything's going to be bearish pound because interest rates are coming down. So if it does rally up, it will come down when Bailey announces the interest rate drop. So that's tomorrow. And then we've got non-farm payroll Friday, which will be fun. So yeah, that's all I've got for you today. Anything else you need, I'll be in Discord or Telegram, but I'm going to continue to test with the RSI2. It's nice as an add-on strategy. It's never going to set the world on fire and make an absolute fortune. but for a slow burner kind of pension fund investment type strategy, it's pretty good. So it'll be something I'll probably run on an account, but I need to forward test it on a small account properly first when I've decided on what I'm going to do with it. But I don't know. We will see. It will evolve. All right. So I'll be back tomorrow morning, 8 o'clock. Anything you need before that, I'll be in Telegram and Discord. Other than that, have a good day, and I'll see you guys tomorrow.